Imagine waking up one morning, opening your phone, and seeing a headline that says that one of India's most trusted banks just lost 66,000 crore rupees in a single day. Not because of a scam, not because of fraud, not even because of a loan default or a loan gone wrong, but because one man sent in his resignation letter. Now, if you have money in HDFC Bank, a savings account, FD account, salary account, your first instinct probably was if your money was safe or not. And if you own HDFC shares, you probably felt your stomach drop. And that reaction is completely normal because most people have no idea how a bank actually works from the inside, what each person does, how decisions get made, and why one person leaving can shake an institution worth lakhs of crores. So today we are going to fix that. By the end of this video, you will understand how a bank like HDFC is actually structured, who does what at the top, how they really make money, and what the RBI actually does when things do go wrong. And most importantly, whether you should be actually worried. So on 18th March 2026, HDFC Bank's part-time chairman Atanu Chakravarti sir quietly stepped down. He didn't say he was tired, he didn't cite a health issue, he didn't say he was moving to a better opportunity. He said that he had, and I want to pay very close attention, he said he had ethical disagreements with certain internal practices that had been going on for 2 years. Now, in most industries, ethical disagreement might sound like a corporate jargon, like a polite way of saying that you did not get along with your boss. But in banking, the word ethical is not just a value, it is the entire operating system because banks run on trust. Not technology, not money, but trust. And the moment someone at the top says something wasn't right ethically, the markets don't wait for an explanation, they react. And react they did because the stock crashed to a 52-week low of around 770 rupees per share. That is nearly a fall of 8 to 9% in a single session. 66,000 crores were wiped out in the stock market and in the market cap. KK Mishra sir was quickly brought in as an interim chairman for 3 months, but the question was that nobody was answering is what does a chairman actually do? And why does one person who is part-time, non-executive, not even running the daily operations cause this level of panic? And to answer that, we need to go inside into the bank. Let me give you an analogy first, because the structure will make complete sense once you see it. Think of HDFC Bank like an Indian cricket team. The board of directors is the team management, BCCI level, and they decide the strategy. They pick the players, they set the rules, but they are not on the field. The managing director and the CEO, who at HDFC is Shashidhar Jagdishan, he is the captain because he is actually in the game every single day. And the chairman, he is the head coach. He represents the team to the BCCI, and in our case, the BCCI is the RBI. Now, let's break down the role of each person properly. The chairman is part time and non executive. He leads the board meetings, he ensures governance, he is the face of the bank to the regulators. He does not run daily operations. His job and his real job is credibility. The MD and CEO runs everything, day-to-day decisions, strategy execution, growth target, business decisions, and he is Shashidhar Jagdishan sir. He is the most powerful person in the building. The deputy MD assists the MD and often focuses on a critical area like operation, risk, international business, and executive directors are the people who are below them, and they run specific divisions like retail banking, treasury, wholesale, technology, and then there are independent directors who are outsiders. They are the external appointments who are approved by the RBI, whose job is to ask the uncomfortable questions, oversee the audit committee, prevent conflicts of interest. Their interdependence is not optional, but it is mandated by law. And the key insight here is, and what the media missed, is the chairman does not run HDFC Bank. Shashidhar Jagdishan sir does. Operations are running, nothing is stopped. So the question you might be facing is why 66,000 crores disappear? Because the chairman's real job and his only real job was trust. because he was the face of governance to the RBI, to the institutional investors, to the public. And when he said he had ethical disagreements, he withdrew the trust and the markets priced the uncertainty immediately. Now that you understand what the actual structure of a bank is, let's talk about something even more fundamental that some people and most educated people also get wrong. That how does a bank like HDFC actually make money? Because most people will say that they take deposits, they give loans, and they keep the interest difference. And yes, that is true, but that is only a part of the big picture. 70 to 80% of HDFC's income does come from interest. Home loans, car loans, personal loans, business loans, all types of loans you can include in that, where they charge the borrowers more than they pay the depositors. That gap is called as the net interest margin, and that is the engine of the bank, the engine of the revenue. But the remaining 20 to 30% is where it actually gets interesting, because credit card transaction fees, foreign exchange charges, wealth management, commissions, insurance distribution. Like every time HDFC sells you an insurance policy, they earn a commission. Treasury gains from trading government securities, and even processing fees on your loan application. Like these are non-interest income streams which exist to diversify the risk when interest rates fall and margins on loan compress. These streams, income stream, non-interest income streams, actually keep the business healthy. And internally, the bank runs on what is called three lines of defense. The first line is the business units, which execute, including the retail, wholesale, treasury. Second is the risk and compliance monitoring. Third is the internal audit, which verifies that every single rupee which moves through HDFC goes through this system. Again, I would like to tell you three lines of defense. The first is where the business units actually execute: retail, wholesale, treasury. Second is the risk and compliance monitor. And the third is the internal audit verification, where HDFC Bank audits everything. Now I need you to sit with something for a second, that HDFC's Q3 financial year 26 profits beat expectations of analysts. Their gross NPA, which are bad loans, are at 1.24%, which are quite excellent, and the loan growth is strong. The business is healthy, the fundamentals are solid. Then, why did the stock fall 9%? Why did 66,000 crores disappear? Because markets in the short term, they do not price fundamentals, they price perception, uncertainty, governance risk. When the top of an institution is questioned, even without proof or wrongdoing, institutional investors don't wait. They sell first, they ask questions later. Short term markets price perception, long term markets price reality. Remember that. Now, let's close the loop that I opened at the beginning of the video of your money being safe. And to quite frankly answer that, we need to understand what the RBI actually does, because most people think that the RBI is an entity that just changes the interest rate, but it is far more beyond that. Where the RBI licenses every commercial bank in India, it does off-site monitoring, constantly analyzing the data from the banks, on-site inspection. Like they actually walk into banks, they check everything. They enforce something called as the CRAR, the capital to risk weighted asset ratio, the CRAR. And every bank must keep this CRAR at 11.5%, above 11.5% every single time. And that is the cushion, the capital cushion that protects you if loans go bad. And HDFC's ratio is quite well above the minimum. And when this resignation happened, here is what the RBI officially stated of there being no material issues that exist in HDFC Bank. That is the most powerful financial authority in India publicly saying that the bank is structurally fine. The RBI also controls the repo rate, CRR, cash reserve ratio, and these are the levers how they control the money in the system. I will make a separate video if you like on that. They control how much expensive the credit is, how much liquidity banks hold, and in extreme situations like Yes Bank in 2020, the RBI can step in as a lender of last resort and control directly take control of the bank. And although that is an extreme case, it won't happen here. Where situations like this do occur, it is very extremely rare that this actually happens. But leaving that aside, all 9,000 plus branches of HDFC are connected in real time through what is called as the core banking solution or central banking solution, where payment, transfer balances, all are centralized, all are running regardless of what is happening in any boardroom. So the question of is your money safe? The answer is your deposits are protected up to 5 lakh under the DIGC scheme. That is the Deposit Insurance and Credit Guarantee Corporation. That is government backed insurance on every bank account in India. For a bank like HDFC's size and HDFC's capitalization, the regulatory standing, the risk to your savings in this is very, very low. Now, let us zoom out a bit, because this video was never really about HDFC Bank. It was understanding a system that holds thousands of crores from millions of Indians and how fragile the trust inside this system truly is. One word, literally one word, which was ethical, wiped out 66,000 crores from the market. Not a fraud, not a scam, not a loan book, a word in a letter. And that is the lesson. Because in banking, in any institution that runs on public trust, perception is reality. And at least in the short term, perception is the reality, because in the long term the fundamentals win. HDFC's profits are growing, their NPAs, that is non-performing assets, are very, very low, which is excellent. The loan book is strong, the capital ratios are healthy, the business is intact. KK Mistry sir is the interim chairman for 3 months. The real signal to watch is who actually the RBI approves as a permanent chairman. That one appointment will tell you about everything where the bank is headed. And I'll be honest with you, before I shooted this video, before I researched this, I didn't fully understand how the bank governance worked either. I knew the products, but I did not know the architecture. That is why I made this, because if one person watches this and stops panicking every time a financial headline screams at them, then it is worth it. And that is for today's video. If you found it helpful, share it to that one person who has that account in HDFC Bank, so he does not worry over it. Share it, subscribe, like to the video. It pushes out into the algorithm. More and more people will watch this information and watch this valuable content. If you have any more idea about a topic on which I should make a video about as a class 12th student of commerce, please, the comment section is open to you. And thank you very much for watching. As a added side note, I will like to show you the research which I had done. Like, this is just one printout about what I had prepared, and I covered all of it in today's video. So if you liked it, if you found it truly, if you found it to be helpful, share it, like it, subscribe it, comment the word HDFC in capital letters so that I can understand that you watched till the end. If you have any more ideas about how I should structure my videos, how I should, the comment section is yours. It is truly, I'm truly grateful for your suggestions and any advice that you might have. Till then, thank you very much, and I will see you in the next video. Take care.